the author of Get a Financial Life. And John Simons is the senior personal finance editor at Black Enterprise magazine. Okay, guys, let's get right down to the hard work here. Jim in Denver, Colorado asks, I receive a letter from one of my credit card companies informing me that due to lack of use, my account would be closed in 60 days. I've never been late on a payment, but haven't used the card in over a year. I only have 3 other credit cards, and I'm concerned that this will negatively impact my 700-plus credit score. Yay! Should I close the account myself before they do? Beth, I get this question all the time.
You know, Jim, like millions of Americans around the country are seeing their credit lines closed for doing nothing. They didn't do anything wrong. But what I say is he should probably go ahead, close the account if they're going to do it anyway. It doesn't really affect your credit score if you're the one closing it or the bank's the one closing it. However, they will put in your credit report closed by lender, and down the road it could look a little bit not so great. So I would suggest he close it. If he's too late, he should write a letter to the credit reporting agencies and say, this was closed, you know, because they cut my credit line for nothing wrong that I did, just so that information is there on his credit report.
I just hope this isn't his oldest credit card, because that could be a problem with your credit score.
Absolutely. I mean, the other thing that will happen with his credit score is because they look at the usage ratio, how much debt you can borrow versus how much he's actually borrowing it. It will decrease the amount he can borrow, and that will make his usage ratio higher. So you might want to get another credit card to increase the amount he can borrow.
I hate to think of telling people to get more credit cards,
but
there you
it's
go.
A crazy game.
Let's get the question in from Barb in San Diego. How does a secured credit card work? I understand the user deposits money with a cardholder company, so you only spend what you've deposited. But can they charge you an APR fee, meaning interest, on your money? John?
Well, the answer is yes. They can charge you interest on the money that you're charging. What the secured credit card is it's a way of helping people repair their credit. So it's a very good tool for that reason. What the customer does is they give the credit card company, let's say $500. The credit card company takes that money and puts it into an account, an escrow account, where it earns a little bit of interest while you have the card. Over the course of the year, you can charge up to, you have a credit limit of maybe, say, $500. You can charge that. Hopefully you pay it off in a good amount of time.
And your credit score gets better.
And your credit score gets better.
All right,
and usually the